welcome to the Finance Basics training. My name is Sharice Myrie. I'm Vice President of MH Miles Company, and we are a certified public accounting firm. We're headquartered in Decatur, Georgia, and we have offices in Decatur, Georgia, Douglasville, Georgia, Washington, D.C., and Albany, New York. And our firm specializes in governmental compliance. And while we're supporting partnering with Decal today to do this session is because we provide audit training and consulting services to Decal. We've done that since 1999, and we do that for the Georgia Pre-K program, along with other programs that the agency administers. And joining us today, we have members of the Pre-K team and the audits and compliance unit. So if you have questions that come up along the way, feel free to enter those questions in, and the team will try to answer the questions as we go. And if we're unable to answer your question, or if it's more specific, the answer is more specific to your organization and not necessarily something that benefit the group at large, we'll get back with you directly one-on-one to answer your question. Okay. So with that said, we're gonna really just focus on two main areas today. And I know this is being recorded, so you'll be able to access this presentation, later if you need to refer back to it. The two main things that we're gonna focus on today are the basics on tracking your pre-K grant funds and how to prepare for an AUP. And so when you think about pre-K grant reporting, what is one word that comes to mind? And you can just type that in the chat to the host or everyone, whoever you can type it to. But what is a word that comes to mind when you think about pre-K grant reporting? Pre-K grant reporting, what comes to mind? Compliance, necessary, required, accuracy. These are some great responses. Exactly. So these are all correct answers that probably pop in your head when you're thinking about pre-K grant reporting. And so what you'll discover is that the pre-K program doesn't require you to reinvent your business. It's about this session is about building on the existing practices that you already have and plugging in a few additional expectations to stay compliant. And that's why it's finance basics, right? It's those things to demonstrate to you that you're already following a lot of the things that are required by pre-K, and simply adding pre-K to the program just extends those activities that you're already doing over to pre-K. So we're gonna talk about a few things. Our learning outcomes are for you to understand the expectation to employ sound business practices. We're going to also, hopefully you'll walk away understanding the benefits of effective financial management and see how that correlates to the pre-K program. And then we're going to identify some strategies to support any costs that you report on the pre-K reconciliation. And then also we're going to walk you through the AUP process so that you can understand what to expect if you are selected for AUP. And then hopefully you'll walk away with some best practices to prepare for the AUP. So with that said, I have another question for you. What comes to mind when you hear the word good as it relates to business practices? So when you hear good business practices, what comes to mind? So we have some responses: compliant, transparency, good standing. Okay. Let's see. What else do we have?
Let's see, order and system.
Okay, order, systems, very good. Efficiency, fantastic. So those are all great examples. Some of you had some of the words that are displayed that I'm going to display on the screen. So beneficial, sound, safe, reliable, appropriate, excellent, proficient, positive. That's what you think of when it comes to good business practices. And so the good thing to know is that a good business practice um, is something that you've already demonstrated because you've been awarded the pre-K grant, right? So you've already demonstrated good record keeping, good business practices. According to the businessdictionary.com, the definition on the screen is what good business practices are. And so it's a positive, effective legal process and procedures that are employed, followed, excuse me, and monitored by a company and its employees in the pursuit of the company's overall business goals and objectives. So as a business, whether you are a not-for-profit, a school system, a individual um, daycare center, you already has to employ good business practices in order to be in business. Excuse me. And so when we talk about those good business practices, they extend over into financial management. So again, since you all were already awarded the pre-K grant, you've already demonstrated that you can employ good business practices and financial management activity skills. And so you have record keeping a skill set, you have a budget awareness skill set, and things like that. So you already have a strong foundation. So those things are just going to spill over to pre-K. And so when we talk about financial management, again, you're already doing those things. And so think of, the bookkeeping and the financial practices that you're already doing, adding the pre-K process to that adds the accountability factor, a additional layer of accountability. And so what I want you to think about is what financial management is. So it's planning, directing, monitoring, and organizing, and ultimately controlling the money and the resources that come into your organization. So everybody's already doing that at some level. And so there are several benefits to effective financial management. So although you are already in the process of doing financial management, that doesn't mean that it's effective, right? But some benefits of being effective as you manage funds are that you can make sound business decisions, right? And so you can determine whether accepting a specific grant, running a program, makes sense for you based on the financial data that you have access to in your systems. You're able to assess profitability if your organization is going to go out of business or if it's going to continue to be funded. You'll be able to demonstrate that profitability through your financial statements and any reporting requirements that you have, be it taxes, your reconciliation, whatever, right? So you're able to demonstrate profitability. You can also plan for business growth, right? You can evaluate your capacity to be able to expand your programs. You have one pre-K classroom and you want to take on two more. You can assess your ability to be able to do that by having effective financial management. And then also, the key thing is that effective financial management allows for adjustments along the way. And that's a really important factor because if you're monitoring what's happening with your program as you go, then you're able to make those adjustments along the way. And you don't wait until you get to the very end and say, oh, I should have did that. So one good thing about today's session is you're just in the beginning stages of this new pre-K year. So if you hear something that you may not be doing right now, it's early enough in the game for you to make a change and to right the ship and start implementing those new processes, right? If you are thinking about the reconciliation that you have to complete for the prior year, you can think about, hey, did I do that? Did I track that appropriately? Am I going to be able to support it if asked? And so financial management is definitely key, and it's a key component to managing pre-K. So when we think of financial management, these are the pillars of financial management. And these 6 pillars are related to financial management as a business and also for pre-K. So of course you see budgeting, record keeping, recording, reconciling, reporting, and internal control. And so let's see, basically, how does this relate, right? So when we're talking about budgeting, that means you're planning before you spend money. So just like you do that in your normal business, you need to do that with pre-K. Record keeping, we know that record keeping is a key component of Georgia pre-K. And so you want to make sure that you're maintaining source documents, which would be anything from contracts, receipts, bank statements, proof of payment, credit card statements, things like that to support the financial transactions associated with your program. The next thing is recording. So you're tracking every dollar in your accounting system, right? So whatever your system is, and we're going to talk about financial systems, but you should be able to account for every pre-K dollar that you receive accurately. And you should be able to account for every dollar you receive accurately in total as a business. Reconciling, matching what the books say to what the bank says. So whatever your financial tracking system is that you use, being able to match that to what the bank is saying. If the bank said you received $50,000, then your financial records should demonstrate that you received $50,000. If the bank says you had $42,000 in expenditures that came out, your record should support that you had $42,000. The next thing has to do with reporting. And so reporting is really telling your financial story, right? And so when you think about reporting, you're reporting things as a business. You're reporting taxes to the government. You're reporting results to your board of directors, if that applies to you. You're reporting information to your auditor if you have to be audited. And you're reporting things to Georgia Pre-K to say how you spent the funds in your pre-K reconciliation. And then finally, internal controls, right? And that is the process that you have in place as a business to prevent and detect errors, to make sure that you have a safeguarding of assets in place, which simply just means that you have a way to make sure that the money and things of value are protected. So you have internal controls in place to make sure that you have those protections in place and that you can detect if there's something wrong. And so one of those protections I wanted to mention to you all to see if you all have, and this is something that you can also enter into the chat, is do many of you have fraud protections on your bank accounts? So do you all have any kind of mechanism where you get an alert for transactions over a certain amount, or protections where you have to enter in all the transactions before and approve them before they can be deducted from your bank? So that's a internal control that you can have in place, not required by pre-K, right? But it's a good business practice for you to have to make sure that you have controls to help you detect and to prevent errors, as far as your financial management is considered. So you want to make sure that you have some level of controls in place. So it's great to see that some of you do have those protections, and I would encourage you to investigate what fraud protections exist so that you can institute those at your organization. So let's talk about record keeping. We're talking about financial management. One of the key components of having effective financial management is, in fact, record keeping. And so when it comes to record keeping, we have to monitor, we use it to monitor, prepare, track, and support, right? So you monitor your business operations based on your records, okay? You use those records, same records, to prepare financial statements to show the health of your organization and how each, grant program is doing. And then you also use those records to track revenue and expenses, meaning any money coming in and any money going out. That's how you're using those records. And then to prepare and support business activities, including pre-K reconciliation reporting. So all the things that you're currently doing as a business, now that you've added pre-K to the things that you offer, it just extends those same activities over to pre-K. So I guess the point is that you'll learn throughout is that it's not a heavier lift because you have pre-K. So you shouldn't say pre-K is requiring me to do X, Y, and Z. You're already required to do it as a business. Pre-K may have some additional accountability levels of and rules that go along with how you can use the money, but monitoring and reporting and tracking and supporting how that money is used is something that all of you are already doing. Now, when we talk about record keeping requirements, you can find them in these sections of the operating guidelines. And OG stands for operating guidelines. And so those are the sections where, it speaks about record keeping. And so one of the things you want to make sure that you understand when it comes to record keeping is that there's an expectation that you as a provider maintain full, complete records to support the funding that you receive. And you have to maintain those records for 3 years beyond the agreement ending date, or if any of the things that are listed on the screen are there, you have to, have it beyond those dates when they're resolved. So if there's litigation or any kind of claims or any kind of review findings, then you need to extend that record keeping practice, so those things are resolved. And so I told you we're going to talk about record keeping systems, and hopefully this does not look like any of you, right? And if it does, then maybe you won't look like this at the end of the session. So one of the things that I want to ask is the type of record keeping system that you have. And you can also put this in the chat. So I want to know if your system is completely manual, if it's completely automated, or if it's a hybrid. So if you can put in the chat what type of record keeping system do you have, and financial records keeping system, I guess, to be more specific, if it is manual, automated, or hybrid. Okay, so I see have some varying things going on. So we have some hybrid. We have, I see QuickBooks, hybrid. Yeah. So let's just talk about it, right? So when we're talking about a manual system, we're talking about old school, pen and paper, right? Spreadsheets, no level of computer integration, and some challenges associated with that is that process is slower, right? It's not the most efficient way to manage and track your financial record. It's challenging to maintain because you got different mechanisms, a spreadsheet over here, a notebook over there, it's very slow. And the thing about a manual process or a completely manual process, it has a high risk for errors. And so for any of you that have a manual process, you might want to consider, some level of automation. Now, I am a pen and paper person. However, I understand the benefits of having automated systems. I'm not sure that I'm 100% automated because that means there will be no paper in my office, and that is not true. But the majority of the things that I'm going to rely on, I am able to automate in some way. So the next thing is when you're talking about automating, some automated systems, you may have one that has bookkeeping merged with attendance and enrollment, something like that, or just one component of those. The benefit of having an automated system is that it streamlines, especially if it's fully integrated. But the key thing to take away with an automated system is that anybody ever heard of the term GIGO? It's only as good as the information that you put inside. So garbage in, garbage out. GIGO, that's what GIGO is, right? So if you can have a great system, you can use QuickBooks for some elaborate system that costs, a whole lot of money, a big school system. But if it's not set up properly, and if the person that's entering the information in, it's not gonna matter. And the way to test that is if you have to run a report from your system. I don't know about this applies to nobody in a different group of people. If you have to run a report for somebody and you give them that report, if you find yourself having to add stuff to the report, explanations, additional pieces of paper, no, it's not effective, right? Because it should be able to stand on its own. So that's a good test where you say, oh, well, it says instructional supplies and materials, but what that really means is food. No, right? So garbage in, garbage out. You want to make sure that your automated system is accurate, and the hybrid system. And I will say that this system that most people use, a combination between the two, something automated, something manual. So for the most part, things will be, in the accounting system, whatever accounting package or service that you use. But there are some things that you may track manually. So for example, let's take instructional supplies and materials. You may have a account named instructional supplies and materials. And that account has all instructional supplies and materials in it. But the way that you track the instructional supplies and materials by classroom, you might do it on a spreadsheet, right? So if you have 2 classrooms or 3 classrooms, you may say classroom A got these supplies, classroom B got this, classroom C got that. But the number in your accounting system is going to be the total for instructional supplies and materials. So that is a example of a hybrid kind of system where you do something automated and you have a manual component to it. And so with that said, your record keeping system should track revenue and expenses by program. It's going to either track it by an account name or account number. What we recommend is that organizations that have different programs kind of align their chart of accounts or coding system with the same line items that are on the budget or the reporting system that you have to, adhere to, or at least do some sort of a crosswalk. So say if you're on CACFP and you're also on pre-K, say you also have a Head Start component as well. So you want to make sure that your system is able to track each of those programs separately by either a name or account number. And those names or account number attached to those grants that you receive should coincide to some degree or have some level of correlation to the way that you report the expenses and revenue to those particular agencies. The next thing you want to make sure you do is that your entries that you have in your accounting system are supported by source documents. So remember our term GIGO, garbage in, garbage out. Just don't be putting stuff in the accounting system based on what you think it was. It should be tied to a piece of paper. So, and that piece of paper goes beyond your bank statement. So for those of you who, have outside bookkeepers, or if you're the person that does it, the bank statement is not necessarily enough to support what the transaction is, right? So the bank statement may say Walmart. What category is that? Is it food? Is it supplies? Is it operating? Is it, building stuff? It just says Walmart. So relying on your bank statement alone is not going to be able to support accurately what you have in your financial system by itself. So you want to have source documents, right? And so you want to have things that support the deposits that you've made, any invoices or receipts. If you have petty cash that you use, you want to make sure that you, have that. Any credit card statements. All those kinds of things are examples of source documents that would support the entries that are in your accounting system, and will support those things that you do manually, right? So we said the majority of the systems are probably hybrid. So if you have something on a spreadsheet, then that source documentation should also support what you have on that spreadsheet. You also want to have accounting policies and procedures, specifically as it relates to cash purchases and reimbursement, right? So if there's anything that you're doing, you want to make sure that how your items are recorded in your financial management system at a high level. Forget about pre-K for 2 seconds. You want to make sure that information is being entered in according to your process, right? And so your accounting policies and procedures should not just be something that you can email to somebody if they ask for it. It should be something that a person can read and know that that's how you literally do it. So when they look at your systems and your reports, they can rely on and be confident that what they're looking at is accurate. So when we talk about record keeping systems, again, you want to make sure that it identifies the program revenue, right? So the money received from Bright from the start. And you'll see on your payment advice in the system basically the money that you've received from right from the start. So one source document, if you get direct deposit, will be your payment advice that says you received this amount of money and it was recorded in your bank account and it then made it to your financial management system. Your bank statement will show the money that was actually received. And you'll have that to support that. And then you also would have the expense side. And so the other thing that you can look at is on your financial statements that you submit for the revenue side of everything. You're going to see that you have the record, the payment advice. You'll have the bank statement, and that would agree to your income in your financial statement for pre-K. So now let's talk about the expenditures, because the income side is pretty straightforward, right? This is how much money you got in. This is the pre-K money I received. It's going to show up on your payment advice. That same amount should show up on your bank statement, and that same amount should flow through to your accounting system, whatever that is, manual, hybrid, or automated. And so let's look at the expense side of it. So there are, obviously certain criteria as it relates to expenses. And those criteria include those expenses being allowable. And what being allowable simply means that it's an allowable program cost. It means that pre-K is benefiting from this particular expense in some way. And it also means that that expense is not expressly unallowable. So, for example, if the pre-K guidelines prohibit the purchase of certain things or limit the purchase of certain things without some level of approval, then it's considered unallowable. An expense can be allowable in nature and then turn out to be unallowable later. And so an example of that would be you had an expense, it is an allowable expense. We'll go with instructional supplies and materials because that's the easiest one, right? And we know that there is a list of things that you can purchase according to the basic materials, equipment, and supplies list, right? Say you purchase those items from wherever you purchase them, Amazon or Walmart, and you have your bank statement showing that you went to Amazon or Walmart. You put on your pre-K reconciliation that that's part of your instructional supplies and materials expense, but you lost the receipt. It then becomes unallowable because how do I know what you purchased, right? So that expense that by nature of the program, can then convert to an unallowable expense for something like that. That's when we fall back on the importance of record keeping. The next thing related to expenses, like I said, it has to be an expense directly benefiting pre-K. So that's kind of a guiding star to see that, hey, okay, maybe I should be able to charge that. The other thing is that expense is applicable. And so when we talk about allocable, we mean that pre-K is only allocated its fair share of that particular expense. So let's look at, I don't know, maybe rent, right? So space. We know that pre-K benefits from having space because the participants are in a classroom, right? There is space. And we know that there is a cost associated with having that space. But should pre-K pay for all space? Would you have to have space if you didn't have pre-K? So when you went into business, did you go into business needing space, right? And pre-K then became a participant in that space. So pre-K is benefiting. It's a direct benefit. It's an allowable cost. It's allocable, but how do we allocate that cost, right? And so when we talk about allocating the cost, it should be reasonably allocated based on whatever that cost is. And so the allocation for space could be something, the best allocation for space would be something like square footage, right, of the space that's being used. So if you have common areas, right, that are used, then you would have to allocate that because pre-K is not always walking in the hallway, right? So you would need to look at square footage, and you can allocate what pre-K exclusively uses along with those shared spaces. Enrollment may be something else that you might want to use, right? So there is no required specific allocation basis, but that basis needs to be reasonable. And ultimately, it needs to be based on actual expenses, and it needs to be supported, right? So if you say it's 43%, 43% based on what? And if you say based on square footage, okay, well, show me where that breakdown is. Not a piece of paper or a post-it that says this divided by this is 43%, but where did the numbers come from, right? To get to your calculation. If you're saying enrollment, what enrollment are you talking about? Show me the total enrollment for your program and how much of that is pre-K. So whatever your allocation basis is, you need to be able to support that. And then it needs to actually be an expense to you. It can't be what I could get for the building is $200, but I don't charge you anything. If you have no expense, there is nothing to charge, right? So these are the things that you need to keep in mind when it comes to allocating expenditures. So you want to make sure that you have that idea. Now, I'm going to go on to talk about the expenditure guidelines. These are the pre-K, operating guidelines. And so when we talk about salary, we know that there's 100% of the total salary funded by Right from the Start, which for lead teachers, if that includes any level of CYE, whatever the total salary is, needs to go to the teacher. Same thing with the assistant teacher. When it comes to operating expenses, we understand that you have a threshold of a minimum threshold of $1,000 per classroom, and that has to be items that are purchased off that basic equipment, materials, and supplies list. We know that you get transportation funding, right? So all the programs get transportation funding. It's a part of your operating costs, and that funding can be used for transporting pre-K participants to and from school, but transportation is not required. So if you don't transport participants to and from the pre-K program, you can use those funds on another allowable expense item. Okay. Technology and playground equipment. We know that those are items that require approval. So you want to make sure that you have that approval in place before you incur that expense. And then you have benefits, right? So benefits for teachers and employer payroll tax liability. That is something that you would report under benefits. And other operating is kind of like a catch-all for everything else, right? You got food and rent and utilities and all those other kinds of things. So other operating has other categories that are on the actual reconciliation, which we'll go through. And the other operating line by itself is really those overhead type costs like rent and things like that, right? So you want to make sure that whatever you're putting on any of these lines is supported. And we're going to walk through that. And the last area I wanted to kind of just highlight was the administrative expenses, which we know that can be no more than 6% of your pre-K budget. And they need to also reflect actual costs, and the allocation that you use for that 6% must be supported. Now, unfortunately, what we see sometimes is people just take 6% of the amount and stick that number on the reconciliation. And so if you get selected for AUP, we say, well, how'd you come up with the number? Where's the support? The support is not 6% times the number. The support is the expenses that support whatever that number is that you put in there. So keep that in mind. The other thing I wanted to mention is about capital improvements, because we're still talking about expenses. And so just by definition, capital improvements are those things that will extend the useful life of a particular asset, like property or something like that, right? And so pre-K has identified specifically things that you can't use the funding for that they categorize as capital improvements. So things like roofing, carpet, wallpaper, alarm systems, you cannot use it for that. Now, also any replacement parts or repairs to those things is also not an allowable expense. And so this is in the guidelines. This is something that you can refer to, but this is just a reminder when you're talking about the expenses, especially in that other category, make sure that you have support and for your rationale of what you're charging a pre-K, what that includes, and somebody can follow what you did without you being in the room having to provide an explanation for every piece of paper they look at, right? So that would be helpful. So this is just an example, and I had to put in red at the bottom that this is not an all-inclusive list, because sometimes people will say, oh, well, you didn't say I needed to keep that, right? So these are examples to get you on the right path of what full and complete records probably look like, right? So itemized receipts, invoices, vendor contracts, employment agreements, your grant agreement, the guidelines that will show, hey, I spent this and it says it right here, I can use the money for that. Any approvals from your specialist, any waivers that you had. Payment advice is one of the things that is really key that you want to make sure that you have access to. Bank statements, canceled checks, front and back is on there. If that is something that your bank provides, right? So sometimes what happens is if you get images back with your bank statements, it may just show only the front, right? And so that bank is saying that they're verifying that it went to the individual that's on the front. But oftentimes there are instances where you can pull the bank records and it shows the front and the endorsement on the back. Now, why is that important? I'm sure that those of you here in Georgia have seen the news reports where they have organizations and stuff at the post office where people take the mail and wash the check. You wrote it out to one person and somebody else ends up cashing it, right? So that's the whole rationale behind the front and the back. Now we know that you're not doing that, but the reason why it's necessary is because people do it, right? And you want to make sure, and that's an internal control for you when you get your bank statements back, or you're looking at, if you use checks, you're looking at making sure that those monies went to who you said. So that's part of who has access to the checks, who you're submitting checks to, what kind of reconciliation process do you have in place? Do you have any fraud protections on your account? Timesheets, distribution reports, tax forms, allocation methodologies, and support. These are all documents that you should have as a business and definitely need to have it for pre-K, depending on how you use the pre-K funds that have been issued. So have a couple questions for you that I want to ask as it relates to supporting documents, right? For certain types of things. So if you all can answer in the chat a few questions for me. So what documentation do you think supports items paid in cash? And I know it says response in the chat to everyone, but if you can't click everyone and you can only click the host, just send it to the host. Support transactions in cash. Okay. So a letter with signature to verify. Let's see.
Receipts.
Receipts, okay. The detail
Lots
receipts.
of receipts.
Okay. All right. Well, very good. So those are definitely great things. But let me just
and we also have itemized receipts, Sharice.
yes, itemized receipts. So that's fantastic. So what I will say is that cash should not be your go-to way of paying for expenses. That's number one, right? So it's not against the law to use cash in a business, but you do have to be able to say what you use the cash for. So it does make it a little more difficult to prove. So itemized receipts, invoices, contracts, etc., whatever that source document is, the guidelines that support that what you're buying is an allowable cost. The bank statement, right? Because the money had to come from somewhere. So did you withdraw the money? Do you keep a petty cash log of how you use that money, what that policy is, and the actual cash receipt itself, right? And then you're going to report that in your financial system. So you can't just give someone a cash receipt and say, this is pre-K. This is a pre-K expense. How do we know that that's a pre-K expense? So you have to be able to walk it back. So you're walking back from whatever you put on the reconciliation to the very beginning. So if your process is, if a teacher needs something that's in the classroom, you have a practice of them picking it up and reimbursing them, then that's a policy. Just say, this is our policy, show the policy, and then we should be able to follow that policy all the way through. Okay. What about items that are paid by check? What documentation do you need to maintain for items that are paid by check? So we just talked about cash. Exactly. So some of them are some of the same types of items, right? Receipts, um, canceled checks, bank statements. Same, pretty much the same types of items, right? Because in order to know that that expense that you paid by check is allowable, when we walk it back, what did that check get, what was it paid for? Is that an allowable expense from pre-K? And who did you make the payment to? Right? And does it show up in your accounting system? Now, what about credit cards? This is a little different. So what do we need for credit card? Yep, we still need a copy of the check. What else do we need? Credit card, invoice, credit card statement. Receipts, exactly. And so as a reminder, just keep in mind that we were having a Zoom ache today, and for whatever reason, you won't be able to see the answers. So chatting to everyone is not an option, unfortunately. So I saw some messages coming through saying they can't see other people's responses. So these are the things that will be needed, right? You're going to need the same kinds of things, but the additional piece is that credit card statement. So I just want to talk about that just a little bit. So when we're talking about the credit card statement, the credit card statement alone is not sufficient. So similar to the Walmart example, the credit card statement is going to show me that you went to Walmart, right? But I still don't know what you purchased. So we would still need that itemized receipt to support that charge. And then we would need to see that charge was paid for. So if you purchase something on your credit card and it costs $526.22, but you're making $30 payments a month, did you pay for that item with pre-K funds? You may not have, because if you only paid $30 a month, or you got interest free and you didn't pay nothing, the pre-K money should still be sitting in the account, right? So that's why it's important to know how you're going to use different financial resources and leverage them for the programs. There's nothing wrong with using credit cards. There's nothing wrong with doing reimbursements, but you need to have a process, and that process is going to be unique to your organization. It's not a one size fits all. So the information or the data that you need to present to support how your expenses and what you reported is going to be based on how you choose to spend the money and how you choose to leverage the resources that you have. So if you choose to use credit cards, then that's what has to happen. And then the key is your pre-K agreement is between the company, right? And right from the start. So if you personally purchase something on your credit card, at what point did pre-K pay for it if you never reimburse yourself? They don't, right? So you can present a receipt and all the things on there can be allowable and it looks great. But if pre-K never reimbursed you for those items, pre-K never paid for it. So the classroom may have benefited, right? But how did you use the money is the question. So just keep those things in mind as we're going along. All right. So what documentation supports items initially paid by non-pre-K funds that are later reimbursed with pre-K funds within the program year? So, pre-K starts when it starts, but when the program period starts in July, You're out shopping, trying to get the classroom ready, right? So you purchasing that because you don't have any pre-K funds. You're using your own money to begin with. So later you have to be reimbursed. And you guys are exactly right. You need the same stuff, right? But the additional thing that you want to make sure you have is that reimbursement policy. What does it look like when you're reimbursing an individual, whether that individual is the owner of the business, a teacher, an outside party, or whatever? So, what is your reimbursement policy associated with using pre-K funds to reimburse an allowable cost item? And so you need to have proof that you reimburse that person. Now, we don't need to see that person's bank account because that's not pre-K money. We don't need to see that person's credit card statement. We need to see the itemized receipt for what was purchased and what you are reimbursing. Simple as that. Told you this is not hard. This is stuff you guys are already doing, right? So the key takeaway here is let your records tell the story, right? So your financial story is going to be based on the records that you keep. And I can't say record keeping enough because that's just what gets you through the pre-K reconciliation process. And quite frankly, it'll get you through the AU pre process as well. And so in the pre-K operating guidelines in section 19, it lays out audit and accounting requirements. And with those audit and accounting requirements, what is listed is that you have to provide an actual accounting of all expenditures and that it should demonstrate how funds were spent in the appropriate category for their intended uses. And it defines what allowable costs are. And basically, we went through that, right? So those allowable costs are those ordinary and necessary expenses that actually benefit pre-K during program operations. So we know the pre-K fiscal year is July 1 through June 30th. So whatever happens in that period is considered pre-K operations, right? And so all money has to be expended by June 30th of the year. And expended means spent. So you can't purchase something on June 30th with your credit card and pay for it when your credit card is due in August or July because you didn't use pre-K money for it by June 30th. So let that sink in. The money has to leave your account by June 30th. So plan accordingly, right? Plan accordingly. So it also talks about allocation. And we talked about allocation. It's really the process of basically assigning a cost to a particular objective and then using a rational basis to allocate that cost, right? So let's say something we gave the example of rent before. So let's say something like your internet bill, okay? The internet is not just for pre-K. The internet supports the whole building, right? In most cases, or the whole business. So how do you know which is the amount that you want to charge to pre-K? And so you have to come up with a fair way to split that cost across everybody that is benefiting from that internet usage. And that's why it's not a one size fits all. It needs to make sense for your business and how you run. So you'll figure out a way if it's enrollment, say pre-K versus non-pre-K, right? Or it's different programs that operate within, in your organization. There are different allocation methodologies that you can use. I strongly encourage you to lean on your accountant or your bookkeeper to help you with guidance on how to come up with your basis for allocation. But the key is you need to use the most logical basis to allocate for shared costs. You want to make sure that you are allocating not only shared expenses, but also shared resources, right? So if you have a category where you're getting money in, which we will talk about, say food, for example, you may be getting food money from pre-K and you might be getting food money from parents, right? And then because people charge for food, programs charge for food, right? So you don't buy food for pre-K class separate. When you feed your participants in your center, you're feeding everybody. So when you go grocery shopping to cook, you're not grocery shopping for the pre-K meal versus everybody else. You're grocery shopping for everything. So you just want to keep in mind your shared resources coming in. And then those shared experience expenses, and you want to make sure that you document whatever allocation basis is reasonable and you have support for that documentation. So again, not a one size fits all. And so if you're looking at things that are pre-K, say for example, Head Start and CACFP, that all together will be your total cost, right? So if we're talking about food, you have one cost for food. So how does each program participate in that food cost? And if there could be also a category that's just, basic participants in your center that don't participate in any of these programs, right? So that would be a fourth category. So you want to make sure that your total costs are accounted for along with your total revenues. So that is something that you want to keep in mind. And what we're going to do is go through the different line items of expenses, and I'm going to give you just some things to hold on to as far as best practices go. And then when we jump into the preparing for an AUP or an audit, you'll kind of see why that matters. Okay, so when you see this little green star in the slides that we're going to talk about next, that kind of constitutes a business rule or some level of rule associated with that particular category of costs. So let's get started. Startup. So if you get startup money, that's something that has to be spent in a certain way. And some challenges that we've seen with startup is that people use the money for things that are not allowable. So you want to make sure that the items are allowable, right? And you want to refer to that basic equipment, materials, and supplies list, have that source documentation and proof of payment. You'll be surprised, maybe not, but there are businesses that don't get proof of payment back. They don't get canceled checks. They don't pull them down from the bank, and then they expire depending on who your bank is. Some banks may go back 5 years. Some banks may allow you access for 6 months. So think about it. When you come around for getting a review, the year is over. So if you're not pulling those things down, and if you don't have the type of statement that gives you a copy of the image with your statement, you're going to have to go into the bank's portal and pull that statement down. So if you forget to do that and you get selected for a review, you're going to have to pay probably $5 to $10 a check to get a copy from your bank. So we don't want to do that, right? So you want to make sure that you have the type of account that have images that come with your bank statement. Instructional supplies and materials. Sorry. Instructional supplies and materials. That's another one. We know that there is a requirement to use $1,000 per classroom. And one of the things that we see often as a challenge is that these expenses are not tracked by classroom. So it's per classroom, not in total. So if you have 5 classrooms, then what Right from the Start is looking for is that each classroom received its proportionate share of supplies and materials in that classroom. And that not one classroom got everything and other classrooms got nothing. Well, how are you able to know that unless you buy equally, for example, 5, 5, 5, 5, 5? You may not do that, right? So you have to track what supplies go to what classroom. And that's one of the questions that's asked during the review. Did each classroom receive its proportionate share of instructional supplies and materials? So you can think about how you would handle that. Now, like I said, some programs just buy it, the same thing for every classroom, at the same time. And the allocation is easy to look at the receipt because it'll say 5 of this, 5 of that. And that means that all 5 classrooms got the same thing. But everybody doesn't do that, and it's not reasonable to expect that everybody does that. But it is reasonable to expect that you know what you're putting in each classroom, right? And so the requirement is to spend $1,000 for each classroom, not $1,000 in total for all classrooms, right? So 5 classrooms, $5,000, but each classroom should be allocated $1,000 each. So the same things. You want to keep that source document and proof of payment. Make sure those things are on the basic equipment supplies list as well. Instructional other. We often see sometimes organizations put things in this category that are not considered instructional other. So you want to make sure that the stuff in that category are things other than instructional supplies and materials that would go in this category. And same thing, have that source documentation and proof of payment. Stationary playground equipment as well as approved technology. Those things require approval, and you want to make sure that you have that approval. That approval should be for both stationary equipment, because you see the green star, and the approved technology. And if any of it happens to be allocated, you want to make sure that it's allocated appropriately. So if you're buying some equipment for the center, that's going to be used by other programs, you want to make sure you allocate that, but make sure that you have source documents and proof of payment. The next thing is unreimbursed food costs. Where programs get caught up with unreimbursed food costs is not being able to determine how much you should charge pre-K, right? So we're just going to use the example of, a classroom. You have pre-K, you have a pre-K classroom and a non-pre-K classroom that you're buying food for. And so you either charge a separate fee for certain participants to get food, or for the people that are not in pre-K, you charge them a flat fee for care at your center that covers food, which means a portion of that flat fee goes to food. So you as a business owner should know, or is going to be held accountable just to say, for each, if my tuition is $150 a week, $5 a week of that money that I'm collecting goes towards food. So that's part of your food revenue. Then you're going to look at your food expenses. So like I said, when you go shopping, you're buying food for the entire center. So say of the $5 for each tuition that was paid, this amount of money went towards food. Say it's, $1,000. We're just using round numbers. And of that $1,000, when you went to the grocery store, you spent $900. So that means that you have $100 left over. And that means that you don't have any unreimbursed food costs, because all the money you took in covered your food costs, right? But using the same food amount, say you collected $1,000, but when you went shopping, your food cost was $2,000. So that means you have $1,000 in unreimbursed food costs. But remember, you have pre-K and non-pre-K participants. Pre-K should not be responsible for paying for all the unreimbursed food costs, only the portion that is related to pre-K. So once you take that $2,000, reduce it by the $1,000 that you collected, what's left is unreimbursed food costs. How much should pre-K participate in that? And it could be based on enrollment, or something like that. And then that's how you get your unreimbursed food cost expense on your reconciliation. So to keep up with that, you want to have your source documents, whatever allocation methodology you used, and proof of payment for the food. So before you even get to the unreimbursed food costs, you have to support all the food costs that you purchased for the whole center. So you still have to have your receipts, invoices, all those things. Lead and assistant teacher salaries. You see the star because there's minimums associated with that, right? So that you have to pay 100% of what you receive for these categories to the teachers. And so some of the things that you need to keep on file, depending on how you staff your classrooms, will be timekeeping reports, tax records, payroll records, and proof of payment. Now, what's key about this category is, let's talk about time reports. Time reports may be necessary simply because what if the teacher is out and somebody has to sub? How do you know when the teacher was out and somebody else was in that classroom? A time report is a great way to do that. It's not the only way to do it, but it's a great way. Maybe you keep a log. Some programs have a calendar where they say teacher A was out this day and this particular teacher subbed in that classroom, right? So Time reports may be necessary depending on what you do. And that's if that teacher was absent, and that's the first thing. And you still could have paid that teacher for that absence. But if your teacher was absent, you still need to be able to say this teacher was out and this is who subbed. So that's why time reports are necessary. The other thing is tax records, because with tax records, as you know, there's a withholding for the employee that has to be remitted to the taxing authority. So when the person is getting paid, they don't get paid the gross number. They get gross minus deduction, they get paid the net. So in order for us to say, hey, you paid the teacher properly, we need to make sure that all the parts went where they were supposed to go. You have the gross number, you have the taxes that came out that you need to remit to the taxing authority, and then you have the net. So the verification is the gross number that will show on the payroll records, the amount that was withdrawn, which will also show on the payroll records, and then the amount that was sent into the tax agency, which will show on the payroll records and the tax records, and then proof that all of that was paid, which will show up on your bank statement. Lead and assistant teacher benefits, you need the same kind of information, tax and payroll records to show basically the benefits portion as well as the employer portion of taxes. For substitute teachers for lead and assistant teacher salary, time reports, source documents, and proof of payment. And again, those time reports or the source document, like say if you use an outsourced staffing agency to fill the classroom, or if you pull up somebody from another classroom to fill in, it will show something's going to show that this teacher was out and this teacher sub. That's for you to create that trail. Other employees, whoever fits that position, for other employees, you would need the same kinds of information: time reports, tax records, payroll records, proof of payment. For transportation, some level of source documents and proof of payment, and the same for operating costs, which is our big category. So allocation methodology is really key for operating costs, simply because those are typically the overhead type costs, like we talked about: rent, internet, utilities, stuff like that. So you want to make sure you have the allocation support for those. Okay. Want to also mention the waivers. So if you have waivers, you want to make sure you keep those waivers on file, because if you don't have a waiver, the expectation is going to be that the minimums are met, right? There may be a waiver requested if there is unused funds because subs were paid at a lower rate, right? So you want to make sure that you get that approved by pre-K so that you keep that on file. And the waiver is typically only good for 1 year. So make sure you have it for the year that you're operating. All right. And then our last category would be administrative category. And that's kind of split into 4 sections. And so for the director, again, remember when we talked about administrative costs, no more than 6% can be used on administrative costs. And then when we talk about the administrative costs, you have to have all this documentation, because you can't just say 6% times the number that I received is my administrative cost. You have to have support for what you came up with, right? And so when it comes to administrative costs, you're going to need the same kind of things for the director. So we know that the director, unless that director is 100% pre-K, probably does other things because they're the director for the center, right? So if they're doing other things, if they're not pre-K only, they're not only doing pre-K, they're doing other stuff. But if they're pre-K only, that's a different story, right? So if they are doing other things, there's some sort of an allocation. If they're not doing other things, you still have to support what you paid them in total, and then you cap it at the allowable amount of 6%, right? So that means that you would have to be able to show that I paid this director, which means I'm going to have all the same things that I have for somebody else: tax records, payroll records, whatever. If they're 100%, what allocation basis I'm saying, if they're not 100%, what allocation basis applies to them. If they are 100%, then there is no allocated cost, and then proof of payment, and then you cap it at the 6%. Same thing applies for the other items in administrative costs. office supplies, bookkeeping and clerical, or any other administrative costs. In total, when you add those 4 columns together, that total amount cannot exceed the 6% of your grant award. But whatever categories you complete and report costs, you have to have the documents to support the number. So the last category is special payments, right? And so with special payments, that's a little unique, right? So special payments is intended to capture those payments that programs receive when there may be additional funding available at some time in the year, right? So you may have had some additional funding that came through and you were able to use it on specific type of items. So what you would need to keep would be that letter or notification on your payment advice that says you have a special payment. And then that notification will outline what it can be used for. Then you would have the source documents to show that that's exactly what you use it for, and you would have proof of payment for that. Now we know with this last pre-K year, for those of you who participated last year and are waiting to do your reconciliation now, you received money for special payments, and those special payments may have been catch-up payments for other categories, right? So it's important for you to know that you are tracking how you use that money. So I'm just going to give an example. If you received a special payment for a teacher's salary, right? And benefits, that payment would have been one lump sum. But you need to internally track what portion you used on salary and what portion you used on benefits. Because if you are selected for AUP, what we're going to look for is where's the support for the salary, and then separately, where's the support for benefits. Even though you're reporting those expenses on the special payments line in the reconciliation as one number, you will you will need to identify what portion is salary, what portion is benefits. So that way we can see if you met the minimum requirements. So a tool to help you track all this is your payment advice, right? So you want to use that to track the payments that you receive. So all of you should be familiar with a payment advice. That payment advice is going to show all the monthly payments. Some key things to zero in on is how much you received for those positions for lead and assistant teacher, because that's going to tell you how much you need to pay out. So if for some reason, let's just say there was a fluke, like we're having a Zoom ache today, say that there was a system ache and you received slightly more than you should have for the lead teacher, and that money wasn't returned, the expectation is that that money that goes to the teacher, because 100% of what you get for the teacher is supposed to go to the teacher, right? So the only way you're going to know what you got for the teacher is to look at your payment advice. If you don't look at your payment advice, there's no way you're going to know that. And so it's going to break down the different categories of funding that you receive, and then you can tie that funding to what your expenses should look like for the category. Your payment advice comes out monthly, and so you should be able to access it when you access the new system monthly. And I know you guys saw that GA Pre-K, that's the new system. So this is a little fuzzy. So I just, this is what the payment advice screen kind of looks like now. But once you all have an opportunity to go in it, you'll see it looks a little different than it used to look in the past. And this is fuzzy because it's a screenshot of the system, and the system is being tested. But basically, you'll be able to see your provider summary of payments that you've received for the month. And you can export this information, I believe, in an Excel sheet. So these are just examples of what that might look like. So talked about a lot. Want to make sure that you were able to understand what we went over. So what positions and salary components are required to be paid 100% of funds received by Bright or issued by Bright from the start? What salaries or positions are you required to pass through at 100%?
I see lead and assistant teacher positions.
Absolutely. Well, that's it, right? Lead and assistant teacher, right? So that whatever you get is what you give. Simple rule, right? Next, what percentage of pre-K funds can be used for administrative costs?
6% is in the chat.
Okay, very good. 6% is the correct answer. All right. What is the minimum amount that has to be spent on instructional supplies and materials for each classroom?
We have got a Gold Star group, Ms. Sharice, $1,000 per classroom.
Fantastic. Our last question is how long must program records be retained?
I'm seeing different response. There we go. 3 years in the chat.
Very good. So as a reminder, 3 years. And if there is litigation or claims or any kind of findings, you have to keep it for a longer period of time. So just to recap, 100% of the lead and assistant salaries and the components are CYE, as well as, the base salary. No more than 6% in administrative costs, record retention for 3 years, and $1,000 per classroom. So you guys did a great job. And so since you've done a great job, guess what? It's audit time. So if you get a letter saying that you've been selected for an audit or agreed upon procedures review, this is exactly what that means. So I know you'll be happy, like the lady on the screen who loves AUPs. You too will be excited when you get this, when you get your letter, right? So just want to kind of highlight what the difference is. I know you hear the word audit, and sometimes institutions use or agencies say audit and AUP interchangeably. So an audit is intended to provide a basic level of assurance on the accuracy of financial statements. So that simply means that a CPA firm is engaged, certified public accountant is what CPA stands for, is engaged to provide a formal opinion on financial statements of a company. That's an audit. An agreed upon procedures review, or AUP, is a list of procedures that the client, in this case, right from the start, comes up with to answer specific questions about a particular program, right? And it's a finding of fact. It's not an opinion. So it's basically, did the program meet the $1,000 threshold for instructional supplies and materials? It's a finding of fact, yes or no, right? There's no opinions in that. And ultimately, the client draws the conclusion of overall operations. So a AUP is not intended to come out with a conclusion of what happened. It's intended to answer specific questions posed by Bright from the start and tell what the answers are. And Bright from the start will draw the conclusion as to how they use that information. And so the selection process, when it comes to whether you're selected for agreed upon procedures or not, is not an exact science, right? The reason why AUPs exist is because DECAL has an oversight responsibility, and they have to do ongoing monitoring. And, all subrecipients at some point have to be monitored. So it just may be your turn. Simple as that. So if that happens, some things you want to do is, during operations, like right now, you want to review your grant agreement. You want to verify your expenses monthly, make sure you have all your records, do an internal review, and have that financial record keeping story. After the review, you want to do the same thing. So for last year, you want to do the same thing that you're doing right now. Make your adjustments now, but then follow that same thing moving back. And so during pre-K operations, like I said, looking at that grantee responsibility in your guidelines. So go back to your guidelines, your actual grant agreement, and see what it's responsible for you to do. Then, if you get selected for review, some things you want to make sure you have. You want to establish and maintain your sound record keeping practice. You want to attend reconciliation training and financial basics training like you're doing today. You want to organize your records by line item if you can, right? So each line on the pre-K reconciliation, organize your records that way. Make sure you maintain source documents, would be those itemized receipts, credit cards, shipping statements, bank statements, canceled checks, all those kinds of things, right? You want to track those expenses monthly and compare them to the business rules to make sure you're on track for doing what's right. And a key component of that is going to be your pre-K payment advice. You want to maintain documentation of all your waivers and approvals and participant records, because that's a part of the AUP process. So you could have got a gold star during operations, but then when you're selected for AUP, we're going to look for your documentation of age. We're going to look at your health and immunization requirements, attendance records, and we need to see that, right? So you want to make sure you keep these things on file. So this is where you're preparing. And the other thing is for special payments, right? We talked about special payments. Make sure you track your expenses associated with special payments and compare those expenses to the payment advice. So your payment advice may say, hey, in whatever month, May, April, you received a special payment. This is what it was for. Make sure you can track your payments, your expenses to your payment advice for special payments. You want to also do some level of internal monitoring. So like we said, monthly financial and programmatic monitoring, that simply means expenses and things like keeping up with your attendance records and health forms. You want to take a look at your reconciliation, right? So your reconciliation, you're going to take a look at that and see what you reported, and then try to see if you have all the documents to support that. And then you want to make sure you're prepared if you're selected for a review. So after you get the notification that you've been selected for the review, then the first thing you want to do is take a deep breath, right? Like the people on the screen. Not that bad. You've got this because you know what you're supposed to have. So you want to be responsive. You'll get an engagement letter. It's going to have a questionnaire on it. That questionnaire is going to ask questions about how you operated pre-K for the year that we're reviewing. You want to provide the information that's being requested. And if you can provide some of the information in advance, because we can do pre-work before we get there, right? You want to conduct a dry run with your people. It's not a secret what we're going to be looking at. We're going to take your reconciliation and try to come back to the same number you did. I mean, it's not a secret, right? We're going to look at all the things we just talked about today. So you can do that with your team, conduct a dry run, and then just be prepared. And so what you can expect is an interest conference to talk about what we're going to look at. You can expect field work, which is a period of time where records will be documented and evaluated. You can expect a preliminary exit conference that's going to say, hey, these are the findings that we see today. These are findings of non-compliance, but the whole report is going to be finding of fact. Then we'll do, there's a QC that's done, and that QC, there may be, something that further questions may come up with. But once everything is reviewed on our end, we'll schedule a virtual exit conference. That exit conference will go over the final findings. At that point, you'll be asked to complete a management representation letter. And what that is a letter from your company to our firm saying that you disclosed everything, related to pre-K operations. And then you'll get a notification letter from Bright from the Start. So in between that management rep letter and notification, Bright from the Start is also going to take a look at the information that we sent, and there may be some follow-up questions. But ultimately, when you get that notification from Bright from the Start, that means it's over, that your review is done, and these are the results. Some of the findings that you get, we said, again, the findings are a statement of fact. So in the report, the findings is going to be either we saw this that was compliant or we didn't. There'll be some findings categorized as record keeping, which generally are no adverse action. It's simply like programmatic reporting errors. For example, if you were missing a child's form or the attendance records for some reason were incomplete, those are considered record keeping findings. There are also findings that are due back to, that result in money due back to Bright from the Start. And some of those findings are often resulting due to not supporting, unreimbursed food costs, not meeting the salary requirements or the instructional supplies and materials. Failure to support that the payroll taxes were forwarded to the relevant taxing authorities, right? So unfortunately, some programs are not able to support that. And failure to support that all the money was used, right? So you didn't use everything. For whatever reason you didn't use it, you can't support that you used it when it comes time to provide the documents, missing receipts or whatever. So then that money has to go back to Bright from the start. And then failure to support that funding was expended within the required period. So that June 30th timeline, if all the money is not spent by that time, then the money has to go back to Bright from the start. And that's not what they want, right? So it's important for you to know that. So again, the common findings are things like reconciliation variances, salaries not met. That can be often due to substitute salaries, administrative costs, taking a blanket 6% and not being able to support that, not having support for expenses. Remember, we talked about the lost receipt, unsupported cash payments, having a whole bunch of cash receipts with no trail to where it came from, no withdrawals from the bank account, no petty cash ledger, nothing like that. Missing itemized receipts and invoices, not having proof of payment. Keep in mind, if you use direct deposit, you'll have to be able to provide records to show that the people got paid. So however you choose to pay people, just keep in mind, you have to be able to prove that they received the money. Not having credit card statements is also another one, and not meeting the payment deadlines. Another common finding is active participation not met. So the attendance records will show you're supposed to have a attendance policy, right? And that attendance policy should be able to demonstrate that students are actively participating in the program. And as you see any types of patterns, right, according to your policy, little Johnny comes in late every Wednesday. That's a pattern, right? Leaves early every Friday. So what documentation do you have to support that you've addressed that with the parent or the guardian? Now, we know we can't make people come to school. We can't make them come, but you can document your efforts to address any attendance issues. So active participation not met is a common finding, and we'll talk about how you can avoid that. So we already talked about these things, which is basically to do the dry run and see what you have when it comes to the reconciliation. So when I said reconciliation variances is a big one, it's basically what you reported on the reconciliation and what we're ultimately able to support. So if our numbers aren't the same, it doesn't necessarily mean it's a bad thing. It would be a record keeping finding if overall you met all the requirements and spent all the money. So the thing is, the variances, though, you may have come up with one number and we come up with something different because when we do it, something might be missing or you may not have some level of support. So the way you can avoid that is to just track and make sure this is your reconciliation you completed. Can I support it? You'll be able to know what we're going to find already. The salary not being met, the things that you can do is make sure you keep all your labor records, your proof of payment for salary, documenting substitute salaries, monitoring and tracking absences. That's a key one. And make sure you pay your taxes. Send them taxes in and make sure you pay them. Okay. For the 6%, just don't take a blanket 6%. Make sure you have support for it. Unsupported expenses, just maintaining those source documents and proof of payment. And especially with credit cards, make sure you maintain the credit card statement plus the itemized receipt plus the proof of payment and adhere to the payment guidelines. And then for active participation, like I said, document participation and interventions with the family to make sure, that they're meeting the requirements. The other thing I wanted to just mention related to proration, right? So say you didn't operate your program for the full 10-month operating period. You will prorate those costs based on the periods that you operated. If you, for example, you pay your teachers over 12 months, then they're working literally over 10 months, but you're paying them over 12. If you give them that option, what you need to remember is the pre-K operating period is July 1 through June 30th. Which means that their last payment would need to be cashed by June 30th. Can't stress that enough. June 30th. Okay. And if they work in the summer, that's separate and apart. You can't use this money to pay them for summer activities. Have to have other money. So with that say, the takeaway you should have is let your records tell the story financially and for program. And so everybody feels ready to go, right? So you are ready to go. You want to ask your pre-K specialist for guidance. If you need to reach out to audits and compliance, you need to, you can feel free to do that. Ultimately, rely on your team. You've got this. I mean, you guys are running successful organizations. That's why you were granted the program to begin with. So just extend those practices over to pre-K and keep that added level of layer of accountability and just embrace the process because, like I said, it just may be your turn. No other reason. And so I want to invite you to visit the website. When you visit the website, there's all types of resources there for you. There are reconciliation training. There is training documents that are out there. There are contacts for you to look at. And then also, also you want to see the recordings as well. So some of the things that we talked about is the expectation, like I said, to employ sound business practices. Hopefully you walked away with some, benefits to effective financial management. You see how having pre-K is not a heavy lift. You're already doing a lot of these things. And also I've given you some ideas on how you can support your reported costs on your reconciliation. And hopefully you have a better idea of what happens if you're selected for an audit or an AUP, and you have some best practices that you can hold on to if you are selected. And so with that said, if there's any questions, that top email is the one that you're going to follow, but prekbusiness.support@decal.ga.gov. Okay, I know that was a lot, but with that said, I'm going to check in with Kay to see if we have any questions or closing comments that we'd like to share with the group.
So, Sharice, first of all, thank you so much for sharing your knowledge and expertise with us today. It was very helpful. Second, the overarching questions have been two things. One, when will the recon be available? We were testing it. It went very well for the providers that were testing it for us, and then we found a malfunction. So the developers have been working on that. We think that we have it resolved. So we're just testing those fixes to make sure it's going to be smooth sailing for you all. And so we will have that open for you as soon as possible. I put the link to the resources in the chat for everyone. The second thing is, yes, this presentation is being recorded and will be posted on the Decal website very soon.
We would like to thank you for participating. If you got anything out of today's training, feel free to let us know in the chat. Again, this presentation recording will be made available. And if you have subsequent questions, don't hesitate to reach out and email them to the team so that they can respond accordingly. And hopefully any level of anxiety that you have, whether this is your first pre-K year or your 21st pre-K year, you should feel a little bit more prepared. So thank you everyone for joining and enjoy the rest of your day.